G'day folks, Jim here from FX Charts, Monday the 30th of March. Well, the dollar had a pretty choppy end to the week, ended up going nowhere really too fast. Against the euro trading down to 108 in Europe and then heading up to 109.5 after some pretty soft US data, the soft GDP, and then finishing just below 109 after some words from Janet Yellen, who was pretty neutral in what she said, didn't really add anything to what we already know. I think this week's going to be pretty much the same. There's a fair bit of secondary data out. It's a shortened week for most of us, being Easter, but on Friday we do get the US jobs data and non-farm payrolls. So I think until then it's going to be largely directionless, but it's going to be volatile and it's going to get increasingly thin as we head towards the weekend. But without further ado, we're going to have a look at the chart, starting with the euro. Alright, okay, as you can see, this is a 4-hour chart. Let's go back to a 1-hour chart here for a second. As the euro, as I say, got down to 108, tested this support down here, and then bounced later in the day before returning to the middle of the range. And having closed the week between the 200 average, which is on the support line, and the 100 average, I think there's every chance we'll continue to hover around those sort of levels for the next day or so. There's a fair bit of data out today. We've got the European consumer confidence. There's some German CPI data, the US personal consumption and expenditure, and also the pending home sales. So we could get some volatility later in the day. But I think all up, it's going to be pretty choppy and without too much direction. As we move further out, if we were to take out this 109.5 level, then the next real resistance up here, we can move back up. Actually, I'll go back to the 1-hour charts. We can move back up to this level here, which we saw last week, which is 110.5. But beyond there, there's not an awful lot. The next kind of resistance is way back here at this low here, which is 110.96. And then we're going to be moving on to this sort of FIBO level, which is about 111.15. The 4-hour charts aren't really showing that we're likely to be heading too much higher in the coming session. And they are pointing, they do point south, so we might get another test of 108, possibly even a little bit lower. But of course, the dailies are still the dailies are still quite positive, and if we've got this trend resistance going way back here to sort of the end of last year. But if we do take out this trend line, then we could see a squeeze back up to this sort of 111 area. I think really that's going to depend on a poor non-farm payroll for us to get there. The market's expectations are about 242k, I think, for the week, with unemployment remaining unchanged at 5.5%, and average hourly earnings rising by 0.2%. So they'll be kept, they'll be in focus. Further out, I think the US dollar uptrend is just taking a bit of a breather, but we have to admit that these dailies are oversold, and it could be that we've got another couple of months of this chopping around, possibly heading a little bit higher. So I wouldn't be getting too overexposed on the downside, I don't think. The base of the long-term channel that we can see here, that's down here just around sort of 101.20, 101, something like that. So we've got a fairly wide range to be working with from now. I mean, it's the low here at 104.61, below there 101, well, 101.20, something like that. And on the top side, as I say, we go back to these sort of levels here, which are probably fairly pivotal to any move. Sorry, I beg your pardon. I'm talking about this one here. That's what are we on? What's weekly chart? So this move here, that's the 110. 96 level. So and as long as we stay under there, I think we're in the downtrend, and the euro will eventually head lower. But in the interim, it's going to be very choppy, and the non-farms will be the decisive factor this week. Most people won't be trading on that day. Of course, it'll be Good Friday, so I'll be leaving stops well and truly before then. So I would be square well and truly before then, I should say. One other thing that makes me think we should have a neutral bias to start the week is this doji that formed on Friday. It's more or less perfect. It's been rejected. As you can see, we've had a couple of tries to get above the daily Kijun here, and it's rejected on a closing basis. And we've actually come back down to meet the Tenkan, which has also held it up so far. So and we've closed right in the middle, and so consequently, I can't really get too enthusiastic either way about the direction of the euro this week. And while I prefer to retain a short bias, I can see that we're really probably not heading too far anywhere in the next couple of days. Moving forward to dollar yen, and while we're here in Ichimoku land, we'll just have a quick look at dollar yen. As you can see, last week that broke down below. This is the daily. We broke down below the Tenkan and the Kijun, and we've come back to rest more or less just above the 200-day moving average, and also above the cloud top, which is about 118 3/4. The cloud is not very thick. It's a pretty thin cloud. The base of it is a 118, around 118.20. If we do go below there, then I think we can probably open up further levels down here. We could be looking at sort of 117 and a quarter or so, possibly even lower down to 117. Don't really think that's going to be the case in the next few days. The dollar's more likely to wait around, I think, for the non-farms on Friday. We've had a choppy few sessions here. This is a 4-hour chart. The rising trend support you can see here is at around that's around this 118.40 level. But equally, I think your 119.40 is going to be quite tricky. Actually, if we go back to Ichimoku world and go to the weeklies, you can see that we've actually made a close below the weekly Tenkan here, which is at 119 sort of 35. If we can break a back above it, then last week's high is up here around, so what was it, 120 or so, 120.15 I think it was. Yeah, so we could go back up there, but right now the momentum, well, no, let me get back to the right chart here. The momentum, the 4-hourly charts are looking mildly positive but going nowhere too far, but the dailies definitely are not suggesting that the upside is potential is going to be that great, and the weeklies also are heading lower. So it doesn't look to me as though the dollar's got too much topside movement in it for the next couple of days. And as far as the weeklies are concerned, we actually might have a bit more of a push to the downside. If we look at these weeklies, these lows down here are back towards 115.5. So it's far too early to suggest that it's going back down here yet. But I think we do need to take note of the weekly momentum indicators that do suggest that it might be the downside that lies ahead. Sterling, well, that's been more or less impossible. I think what's still well clear of sterling. It's very choppy. We've got the UK election coming up on the 6th of May. It's looking very much like a hung parliament could be the outcome there, and I can't see that's going to be good for sterling. So the top side, I think, is probably fairly limited. This 38, this level here has been quite hard to overcome. That's a 150 essentially. If we do go above there, then we can spike back up here to this 150, 165. But I think that'll take quite a major sell-off in the US dollar, which if the non-farm payrolls fall way below expectations, we could see that, I guess. But equally, I think I'd be a seller. If we did move up towards this rising trend line over the next week or so, rising trend line, descending trend line, then I'd still be a seller, because I think eventually the dollar uptrend is going to continue. The 4-hourly charts are completely flat. The dailies are sort of trying to recover, but as you can see, we're just consolidating. And in the bigger picture, we're right in the middle of this long-term channel, and I think that's probably going to maintain the action as we slowly head down towards here, and I think eventually probably heading towards 140, but that's some way off yet. Dollar Swiss, I'm not really going to bother about dollar Swiss, too hard. The Aussie. The Aussie is interesting. Actually, if we go back and look at the weekly, the Ichimoku Aussie chart, if I can find that, Now the dailies, we've actually closed back below the 10 can here. We made a pretty good effort. We got above the 10 can and we finished right on the Kijun actually. But this 10 can here, 77.60 odd, that'll provide the initial resistance on Monday. But more interestingly, I think the Aussie made a valiant effort to break above the weekly 10 can here, and I for one thought last week that it would hold well above it, but we actually come back to close the week below it. And that maintains a sequence going all the way back here to what, August 2014. So virtually 12 months of closes below the weekly 10 can, and it looks like that could well continue. So if we head back towards the Aussie, in the shorter term, we're in a it's a minor channel down here. Now we've broken below the 200-hour moving average. That ties in with the 10 can there. It's a 77 sort of 70. So that's going to be initial resistance. If we break above there, back to 78, I think, and possibly towards the top end of this trend line, 78.30. Although I don't expect to see it up there today. The hourlies are looking negative, as are the 4-hourly charts. And the daily charts are still pointing high, but they've come back to a neutral bias really. So in the short term, I would still be I prefer the downside for the Aussie, but support is going to come at various levels down here. 77.30 is the base of this channel, and then we've got various levels below it, 77 cents, and this rising trend support down here around 76.30. Below which we're heading back to sort of that 76 cents, and the low at 75.59. It looks to me as though it's going to be a fairly choppy ride for much of the week. The main focus will be the Hong Kong Bank Chinese manufacturing PMI, which is due on Wednesday. There's nothing due really today. Tomorrow we've got the business confidence, home sales and private sector credit. So nothing there that's really going to make the market move too much, I don't think. It's all up, it looks fairly choppy. Now the one thing we should look out for on the dailies, if we do see another sequence of sort of choppy trade above sort of 76 cents for the next few days, there is a chance that we're building a reverse head and shoulder. Now, if that's the case, then the objective is going to be back up here around 83 cents. So that's worth keeping an eye on. But as long as we stay below sort of 70, that last week's low, 79.30, 37, I think it was, then I think the downtrend remains intact, and eventually we are heading lower. But once again, direction is really going to be provided by the non-farms on Friday. The Kiwi's proving remarkably resilient, really, and it's closed the week just below 76 cents, having made it all the way up here last week to 70 or just shy of 77 cents. So it's looking, it actually feels all right, but the 4-hour charts are looking a little bit negative, so we could head back down here on Monday below 75.40 and down towards the 75 the figures area, which is the 38.2% of this rally here. The hourly charts, we're stuck between the 100 and the 200-hour moving average, 75.25, 76.15. Probably trade that range today. The hourlies are fairly flat. The dailies, though, they do look reasonably positive still. We've got the 100-day moving average above us at 76.25, and this descending trend line at sort of 76.5. So that's going to prove pretty much that's going to be proved quite resilient if we do see it up there. But if we do break above it, then we can possibly head back up to this trend resistance at 77.5. The weeklies are also looking reasonably okay. So it's while I prefer to be short the Kiwi, I'm not sure that right now is the right time to do so. So I think some caution is required there. But all up, as with everything else, I think probably a fairly choppy start to the week, and not really going too far out of the sort of 76.5, 70 75, maybe even 75 and a quarter area, 75 and a half over the next couple of days. Right, that's about it. We'll have a quick look at the dollar index. Okay, now the dollar index, that got down to a low last week of 96.16, I think it was. And it's recovered over the next couple of days to look slightly healthy. It closed at 97.38, just below Friday's high of 97.92. So it looks a little bit healthier, but the daily indicators are still pointing lower, and the RSIs and stochastics not really showing any signs of turning around in any major way. So all up, as I think this kind of backs up my view, we've got some more choppy trade ahead of us. This 96.15 area will support it initially, but a break of that will take us back below 96, down to 95.80, and possibly back down to this sort of first FIBO level down here at 95.37, which is the whole rally from 78.90 up to the high the other day. So that's the index. I don't think we're going back to 100 yet. Eventually, I think we will. We're going to have a look at the monthly charts. Right now, as you can see on the monthly charts, the indicators actually, the MACD momentum indicators are pointing still strongly higher. The RSIs overbought, but not doing an awful lot. The stochastics actually have turned a little bit lower, and they might have more to go, but I think overall that's probably a reasonably healthy sign, because they're fairly sensitive to stochastics, and by turning lower, if the dollar uptrend is going to resume, we've now got a little bit of leg room to head higher. I'm not sure that's going to happen in the next couple of days at least, but as we head towards the end of the week, we're going to get a decent directional move one way or the other, as the market prices in whether or not the Fed are going to hike rates in June, although I don't think that's particularly likely myself. I think it's more likely to be September, or if the non-farms are a poor number, we could even be looking at a rate rise being delayed until 2016. So who knows? We'll wait until Friday. Most of us will be at Easter at that stage, so I wouldn't be overloaded with positioning. I'm going to be I'll be staying short of the euro. I'll be short of the Aussie, but I'll have lightened up my positions a fair bit, because I don't want to run the risk of a huge run higher in the event of a very weak number. So that's about it. As I say, there's not an awful lot to go on the next couple of days. We've got the data today. There's a G7 meeting later in the week, which could cause some volatility, but the overall focus is going to be on the PMIs, which happened before the non-farms. I think they're on Wednesday, and yeah, that's really about it. We've also got some German unemployment numbers. The EU CPI will be important on Tuesday. The ISM on Thursday. We've also got the ADP jobs data on Thursday. And as far as Japan goes, or elsewhere goes, so we've got the Tenkan on Wednesday out of Tokyo, and today we've got UK consumer confidence, and tomorrow the GDP. So it is going to be a fairly busy week, but I'm not sure we're going to see too much movement. It'll be volatile, and it's going to get increasingly thin. So just beware out there. Have a very good week's trading, a very good Easter, and we'll talk to you next week. Cheers.